When you think about the numbers that we got this morning for how the labor market fared in the month of April, had we gotten these numbers ahead of the Fed's decision, do you think it would have changed anything?
I'm not sure that it changes all that much as we read the Fed as being pretty hawkish this week. In fact, we obviously the language from the statement was removed that the Fed anticipates that further tightening is warranted, but Powell stopped short of saying that the Fed is ready to pause, and he made it clear that the Fed was going to be relying on the incoming data. And certainly the data this morning suggests that the door is open, I think, for another hike in June. And that higher for longer scenario may certainly be in the cards here. It's pretty tough to say that the Fed is going to be ready to start pausing or even cutting with the unemployment rate close to a 50-year low right now. So the labor market is the undisputed champion of the economy right now, despite
Mm.
some other signs that we're headed for a deceleration. Labor market remains tight.
Well, to your point, though, that, the Fed did sound pretty hawkish this week, and they've really stuck to that message for a long time now. You take a look at the reaction in markets today. It seems like the bond market is taking this as hawkish. Two-year Treasury yields up 12 basis points. Then you have this big rally underway in the stock market. Does that make sense?
I know, isn't it amazing that now a 12 basis point move in the 2-year Treasury, which is now like a meme stock, essentially, kind of, we're just brushing it off. No big deal. 12 basis points in a day on the 2-year Treasury. Yeah, I think as far as that reaction, it does make sense. It does look like the Fed's going to, again, have to be a little bit, remain tighter longer than anticipated. But I think the equity market is reacting in good news is good news fashion, which we haven't seen in a while. And frankly, is pretty refreshing, meaning that good news for the economy may be good news for the markets. There's been a fear out there that recession is essentially on the doorstep, knocking on the door. And today's report suggests that maybe it's a ways out here, and that the fact that people continue to have jobs and job growth continues to accelerate here means that we can push this inflation out a bit.